I'd like to introduce our speaker, Allan Jiang. Allan is a financial advisor at Trinity Financial. He graduated from Queen's University with a master's degree in finance. He's also a certified financial risk manager. Allan has more than 8 years of experience in finance and the insurance industry. He's also someone who's very passionate about helping people plan for their futures and make smart financial decisions. Allan is also a volunteer at Access Community Capital Fund. He's a member of our Loans Review Committee, and with that committee, he's involved in interviewing our loan applicants and making loan decisions as part of our Loans Review Committee. Welcome, Allan.
Thank you, Michael. And hello, everyone. Thank you for attending the webinar. My name is Allan Jiang, and I'm so glad to be here to talk about credit cards. So I'm going to cover a lot of information today, and I can talk about credit card for hours. But today I only have 30 minutes. So I'll be flying through a lot of slides, but don't worry about writing everything down. We'll email you a copy of the presentation after the webinar. So without further ado, let's get started. So today we are going to cover a few topics, including what is a credit card, types of credit cards, credit card disclosure, also as known as information box, common pitfalls that you can avoid, and cost of borrowing. So at the end, I will share some useful resources with you if you want to learn more about credit cards. And as Michael said, if you have any questions during the presentations, please just type in the chat box, and I will answer them at the end of the presentation. So what is a credit card? Well, a credit card allows you to borrow money to buy things now and pay later. So the key words are buy now, pay later. It is a revolving credit facility offered by a financial institution or retailer. So in order to get approved, you generally need to have a good credit. So what does revolving mean? Well, this means you have a fixed credit limit you have applied for. As you use the amount available each month and pay it back, you will have access to the same amount of to use over again. So for example, you have a credit limit of 5,000 and you use 500 within the month. This means you will have 4,500 left to use. So if you pay the bill in full, your available credits go back to $5,000 and the cycle repeats. So what are the advantages of owning a credit card? Well, there are many advantages. First, it's convenient. You don't need cash to pay for goods and services. It's really good, like when you shop online, you generally need to put your credit card number there to pay for your purchases. Also, it also comes with the fraud protection with zero liability. If your card is used without your authorization, credit card companies will usually reverse the charge. It also provides an interest-free grace period from the time of purchase to the end of billing period. And credit cards also offer rewards such as cashback, travel points, insurance, and they also help build your credit history if you use wisely. So there are 3 major credit card companies that manage credit card networks in Canada. I'm sure you are very familiar with them because their logos are everywhere. So as you can see, they are Visa, MasterCard, and American Express. So generally speaking, there are 2 types of credit cards, secure and unsecured ones. So unsecured credit cards are the most common type of credit cards. They are not secured by deposit or collateral. In contrast, there's another type of credit card called a secure credit card. So a secure credit card requires that you provide a security deposit to the financial institution that issues the credit card. So your credit limit is normally set as a percentage that's equal to or higher than your deposit. If you don't pay your bills, the bank may seize your deposit. So a secure credit card is very common for people who have no prior credit history or who want to rebuild their credit from a bad credit situation. So you may also hear people talking about prepaid credit card. So prepaid credit cards allow you to spend money you loaded on the prepaid cards in advance. You can usually find them in the drugstores and grocery store. Prepaid credit cards may have a logo like Visa, MasterCard, or American Express on them. However, they are very different from traditional credit cards. Because you're not borrowing money from a financial institution, using them will not have an impact on your credit score. And as you can see, Visa debit and Master debit become more and more popular these days. They are given to you when you open a bank account. However, these credit cards are debit cards, so they are linked to your checking account. So similar to prepaid credit card, using debit cards will not have an impact on your credit score. So again, neither a prepaid credit card nor a debit card is a real credit card, as you do not borrow money from a bank or retailer. So therefore, applying or using it has absolutely no impact on your credit profile. Some retailers like Walmart, Canadian Tire, Hudson's Bay, Costco issue their own credit cards. So these credit cards have some advantage like sign-up bonuses and incentives, and special discount or promotions. However, some retail credit cards do not have Visa or MasterCard logos on them. These cards usually can be only accepted at the issuer stores. For example, if you look at the picture here, can you spot the difference? Yeah, of course you can. One of the MasterCard logo, one of the cards has a MasterCard logo on it, and the other one is without the MasterCard logo. So Hudson's Bay, like for example, offers two types of credit card. Well, the one with the MasterCard logo can be used any place where MasterCard is accepted. On the other hand, the card without a MasterCard logo can only be used in Hudson's Bay store. So you cannot use outside of Hudson's Bay, the store there. So next, we are going to talk about credit card disclosure. So in Canada, credit card companies have to show so Canada credit card. So in Canada, credit card company have to show you the disclosure before you applying for credit cards. So in the disclosure, they usually include following sessions: annual interest rate, interest-free grace period, minimum payment, foreign currency conversion, annual fee, and other fees. So before you apply, please read them carefully. As we all know, the devil is in the detail. So I'm going to use RBC Avion card disclosure as an example to illustrate those concepts. So if you want to have a copy of this disclosure, you can just go to the RBC website and go to the credit card, and you can download a copy there. So the first section is the annual interest rate. If you always pay your bill in full before due date and never use it for a cash advance, you can probably skip this session. But if you do carry a balance on your credit card, you may want to pay attention to this session really carefully. So in some credit cards, companies charge different interest rate between purchases and cash advances. So as you can see from the box, cash advance usually carry a higher interest rate. In this example, 22.99%. It is 3% higher than the purchases. And the interest rate may increase if you miss 2 or more payments in any 12-month period. So even you can't pay your bill in full, you still want to pay the minimum payment to avoid higher interest rate. The next session is the interest-free grace period. So if you pay your statement balance in full before due date, you will not pay interest on your purchases. You will have at least 21 days to pay off your new purchases and fees. And in Canada, the minimum interest-free grace period is 21 days, and some credit card companies offer even longer grace period. So here's a tip for you. If you are planning to purchase a big ticket item, you may want to wait until your current statement is printed. This essentially gives you an extra month to pay off your balance and purchase. Be really careful though. Balance transfers, assets track, and cash advances do not have an interest-free grace period. Even you pay your statement balance in full and before the due date. And let's say if you use a credit card to withdraw money from an ATM machine, you will be charged interest immediately without any interest-free grace period. So never, never, never withdraw money from your credit card. The next session is the minimum payment. As I mentioned before, it's very important to make at least the minimum payment if you can't pay off your balance in full. Your minimum payment will be either a flat dollar amount, usually $10, plus interest rate and fee, or the higher of a dollar amount, typical $10, or a percentage of your outstanding balance, typical 3%. However, paying only the minimum balance you owe means that it will take longer to pay off your credit card balance. You'll pay more interest, and you lose the interest-free grace period. This means like off your purchase will be charged interest from the first day. And some credit card companies charge foreign currency conversion fee, typical 2.5%. So if you do a lot of cross-border shopping, you may want to apply for credit card without a foreign currency conversion fee because it can add up quickly. So the next session is annual fee. A lot of my friends ask me, whether a credit card with annual fee is better than a card without it. Well, my answer is it really depends. While some premium cards charge annual fee to provide additional benefit to their cardholders, like out-of-province country emergency medical insurance, auto rental, like car collision, loss of damage insurance, purchase security or extended warranty insurance. And also, you will get a lot of rewards for the credit card. Generally, it's higher than the no-fee credit card. That you can collect points if you go to like PC Financial or the other card, like RBC Avion, for example, you collect points to exchange for an airline ticket. So, but paying a card's annual fees only makes sense when you are receiving more back than you're paying in. So you need to be a little bit more analytical. So let me give you an example. If you want to rent a car, like most people will buy the rental car, like damage waiver from the rental car company for a peace of mind. So in case something happened, you won't be liable for the damage. So if you have a rental car before, most car rental company will charge at least $20 a day for the damage waiver. But if your credit card companies like offers auto rental collision loss damage insurance, then you don't need to buy the waiver because you'll be covered by the insurance by the credit card companies. So if your credit card comes with $100 annual fee, you'll break even after like renting the car for only 5 days. So again, paying a car's annual fee only makes sense when you are receiving more back than you're paying in. If you look at the information box here, RBC Avion Visa Infinite Privilege card charge $399 annual fee. But I'm sure somebody will find this card really useful because they can get like more than what they pay for. So here are some other fees you may want to pay attention to. Well, the first is cash advance fee. Like you will pay $33.50 each time to get a cash advance. As you can see, withdraw money from credit cards really, really expensive. Cash advance fee also apply to cash-like transactions such as buying casino game chips, online gaming, money orders, and wire transfer. Like if you go to a casino and swipe your card, you'll be likely charged for cash advance fee plus interest for cash advance. And similar to if you're in Ontario, the government has the Play OLG website that you can buy lotto ticket online. Well, if you use your credit card to fund those purchases, you will be charged for the cash advance fee. Also, if you look at the information box here, another thing I want to point out is dishonor payment. So if a payment to your credit card accounts return for any reason, like bounce check, a fee will apply. So RBC, in this example, will charge you $45. So never write an empty check to the bank because you'll get charged much more for the fees. And over limit fee is another fee you want to pay attention to. So if your balance exceeds your credit limit at any time during the month, a fee will apply. Like RBC charge $20 for that. So sometimes you know that you really need to spend the money. So here's a tip for you. So if you want to buy something more than your available credit limit, you can deposit some money in your card beforehand. So let's say you want to buy a $2,000 vacation package, but your credit cards only have $1,000 limit. What you can do is to deposit $1,000 your credit card beforehand. So with the extra deposit, now you can swipe your card for $2,000. However, I strongly advise you to talk about your intention with your credit card company first before implementing this strategy to avoid any confusion. Sometimes, they can provide with you better options like increasing your credit limit temporarily, so you can swipe the card without incurring any over limit charge. Also, another fee you need to pay attention is the promotion rate fee. So from time to time, credit card companies offer you 0% or 10%, 5% a promotion interest rate for the balance transfer. Right now, credit card companies will charge 3% upfront above the interest rate you receive. So even though some credit card companies offer 3%, 0% interest rate on balance transfer, well, they will charge you 3% right away after you write your balance transfer check. So it's kind of a hidden fee that you need to be aware of. So this slide is just the summary of what I said in the previous slide. So now I'm going to talk about common pitfall when using the credit card. First one is that, as I mentioned so many times, you do not pay your balance in full on before the due date. So by not paying your bill in full, you will not only pay extra interest, but also hurt your credit scores. So you should always try to pay your bill in full and on time. Make at least the minimum payment only if you can't pay off your entire balance. So never skip a payment. Another pitfall is using credit card to withdraw cash at the ATM. As I mentioned a couple times before, but now you should know that using credit cards to withdraw cash is a really, really bad idea. It will incur both fees and interest. So if you want to withdraw cash, use debit card. And sometimes another pitfall is that you max out your credit card. So when you use most of your total credit limit, your credit score will be hurt. We suggest to keep your use credit below 35% of your total credit limit and never go above 70%. And the fourth is applying for multiple credit cards within a short period of time. From time to time, especially during the holiday season, you go to Walmart, some people may promote a Walmart credit card to you, and then you sign up and you go to another retail store like Canadian Tire. and you sign up there. So the problem of that is that if you apply for multiple credit cards within a short period of time, your credit score will be greatly impacted, because credit card companies think you are hungry for credit because you don't have any money to use, so you want to apply a credit card to use it. So they think you are in financial stress. So if you want to apply like multiple credit cards, it's better to space out like a few months in between. Well, this will reduce the impact of your credit score. So here are some other considerations. So be careful about credit card balance transfer. Then, as I mentioned before, that the fee will usually apply. And then usually after promotion period, the interest rate will increase to the original interest rate. Like for example, you may receive like 0% balance transfer offer, but if you forget to pay them in full before the promotion period, then you'll be charged like standard 24% interest rate. And also, you may want to set up pre-authorized payment for your checking account to avoid late payments. And if you maintain a good payment record, bank may offer credit limit increase from time to time. So only accept the offer when you can manage your debt, because accepting it will not impair your credit score. And also try to keep your first credit card active to improve your credit score. So remember, running up credit card debt is easy. Paying off credit card debt is hard. If you can't pay off your credit card bills in full before payment due date, you are living beyond your means. So by the way, if you are interested in learning about how to build and maintain good credit history, we also offer a webinar for that. So you can visit our website for more details of our upcoming webinars. And next, I'm going to talk about cost of borrowing. So what is cost of borrowing? Well, if you really need to borrow money and you have to carry a balance on your credit card, so what is the cheapest way to do so? Like, what's the cheapest way to borrow money? Even though it's not really related to credit cards, but it's very important for you to understand the options. Before I compare the borrowing cost, it's important to understand what the prime rate is. I'm sure you have heard of people talking about prime rate all the time. For those of you who don't know, prime rate is the annual interest rate Canada's major banks and financial institutions used to set interest rate for the variable loans. So it's a benchmark rate, and currently the rate is at 3.95%. So how much does it cost to borrow $1,000 for a year? So let's compare. If you qualify for a standard mortgage, usually it has the lowest rate of borrowing, as you can see from the slide. The bank usually charge prime rate slightly above or below. So right now, in this example, I use 3.95%. And at Access Community Capital Fund, like if you approve for small business loan, you'll be charged prime plus 1.25, which is a really great rate for small business loan. Because we are a charity organization, or we are non-for-profit, so that's why we can offer this low rate. So right now, if you borrow money from us, we'll charge 5.2%. Another, so it depends on your credit and employment situation. Line of credit usually has a lower interest rate than the credit cards. And the last option, you want to use payday loan. If you use payday loan, then you're paying a lot, really a lot of interest. Like from this example, from the government of Canada, the effective rate of payday loans 546%. This means that if you borrow $1,000 in a year, you have to pay $5,460 interest. So that's very expensive. So for more information, then I suggest you to look at the website. I have included the link below, so just click it to like learn more about payday loan. So just for summary, from the graph you can see if you borrow $1,000 a year for mortgage, you'll pay like $39 interest. For a business loan, you'll pay $52 interest. For line of credit, you'll pay $69 interest. And for a credit card, you'll pay $199 interest. And for payday loan, as I said, you'll pay $5,460 interest. So that's a lot of money for a $1,000 loan. So please note that the rate shown in the slides just for illustration purpose only. So rates can be substantially higher or lower depending on your personal situation. So also I assume all interest rates are simple interest rate except the payday loan. The rate is effective interest rate. So what I say interest rate is that the rate can be higher for credit card or for mortgages. Even though, as I mentioned before, the interest rate for credit card, let's say for purchase is 19.99%. However, the credit card company charge compound interest rate, which means that every day you pay interest on interest you like incur on previous day. So at the end of the year, you pay approximately like 22.1% interest. So even though even though like what I'm trying to say is that even though you see the interest rate is 19.99% for purchase, at the end of the year you pay like a little bit higher because credit card company charge interest on interest. So just be aware. As you can see, borrowing money from payday loan should be avoided at all costs. It's really, really expensive. Also, borrowing money from the credit card company isn't cheap at all. So if you qualify, you have a better option. It's called line of credit. So what is a personal line of credit? So a line of credit is a borrowing option where you can apply only once for credit limit that you can continue to use and reuse based on your credit needs. So similar to a credit card, it is a revolving credit facility. So interest on the line of credit is generally much lower than on a credit card, right? So you only pay interest on the amount you use. But a personal line of credit is hard to apply because underwriting is required. When you apply for line of credit, you need to provide your employment and income documents. Here's my last tip. If you have a good credit score and good income, then now is the best time to apply for line of credit, even you don't need it right away. Why? Because as Bob Hope said, a bank is a place who will lend you money if you can prove that you don't need it. So if your finance is in good shape, if your financial situation is in good shape, it will be much easier for a bank to approve your application. So next, I just share some resources for you. I think you will find them very useful. Particularly the first one. It's the Government of Canada website. Has a lot of information about credit cards and the consumer protection and the regulation. So if you have time to visit only one website, that's the website you should visit. And next, Michael, we'll talk about upcoming webinars. So Michael, over to you.
Okay, great. Thank you, Alan. So we just wanted to mention the last webinar of our fall series is Business Financials Cash Flow. So that would be a great webinar if you are involved, if you are a small business entrepreneur. There'll be some really good information in terms of the ABC of things that you should think about in terms of cash flow. And you can register by going to our website, and there's a link at the bottom of the homepage. Okay, so we just wanted to allow a little bit of time for Q&A. So if you have any questions, you can put them into the chat box. You can just direct them to Access, and I'll be monitoring that. There were a couple of questions that came in, Alan, so I'll just going to go through them. So one of the questions is how is the amount of available credit determined by your bank? I know you talked about that, that will vary and you can apply to increase your credit, but somebody wants to know how that's determined in the first place.
Well, it really depends on your financial situations. It depends on your income and how much money you make. And also depends on your debt, like how much money you owe at the current. Because all the information, your credit information, will be on your credit report. So when you apply for a credit card, like a bank usually will pull your credit report to determine the best, like according to their guideline, how much money they or how much like money they can offer, like to you, or what's the what should I say, the credit limit can be offered to you. So it really depends on a few things. First is your credit score, whether you are able to pay your bills, and also your income, how much money you make, because it really show a bank whether you can repay your bill at the end of the day.
And if your income doesn't go up, but you are paying off your credit card debt on a regular basis, would they consider raising it?
Well, it really depends. A lot of times, it really depends on the appetite of the bank. Let's say a few years ago, the economy was great, and the bank is much linear in approving credit. So a lot of time they can, of course, improve your credit limit. But if you're during the financial crisis, a lot of banks actually cut the credit limit. Even you paid off your bill on time and before the due date, because the financial situation in Canada was not really in good shape. So for the risk control purpose, they may actually reduce your credit limit. So the best thing you can do if you really want to have a higher credit limit is have a discussion with the bank, and especially you have a long history with your bank and they understand you a little bit more, then they can offer you a higher credit limit. But the thing is that every bank has its underwriting guidelines. So yes, so I can't really say whether they will improve or not. It really depends on their depends on your personal financial situation and also on the guideline. And just another great example is like the mortgage. A few years ago, it's very easy to get approved for a mortgage, but for right now, it's really hard. So yeah, it really depends on the guideline. Yeah.
And you mentioned cash advances a number of times and trying to avoid that. Somebody's asking, is there ever a situation where it would be appropriate to use a cash advance from your credit card?
Well, using cash advance is it's like, let's say it's very similar to a payday loan. So it's not good or bad. If you need cash really, really hurry, like if you want cash now, you have two choices, either payday loan or cash advance. Then I would definitely go to the go to the bank to use a credit card to withdraw money than payday loan, because payday loan is a much worse situation. So if you use cash advance, it's very important to pay it off as soon as you can, because once you paid it off, you will stop incur interest. So that's why that if you cannot pay it off, then the interest will be keep growing. Then at the end of the day, it will be much harder for you to pay for the entire balance.
Okay. And just going through the other questions. So you mentioned credit cards from retailers like Walmart and Canadian Tire. And somebody wants to know if there's really any benefits to taking a card out from those companies as opposed to your bank, which would offer different types of bonuses or benefits?
Well, yes, I think so, because myself owned a few credit cards from the retailers. Because usually, if you shop a lot in a particular store, the reward is much higher than a standalone bank products, and they usually offer you a lot more discount in the store. So definitely yes, but I just want to make sure that you will be able to manage that, because if you right now it's really hard for you to pay off your balance, incurring more debt will put you in a much worse situation, because you use credit card to get the most of the benefit, not to put you in a worse situation than you are right now. Yeah, if you are right now do not have enough income to cover all the costs, I'd rather to just stay off, to make sure you are able to manage that first.
Okay, great. And so you need to really be kind of mindful of how many cards you have then, and not over extending yourself.
Yeah, that's correct. But I mean, a lot of retail store offers really great discount to their cardholders. Like if you for example, today, if you're a cardholder, they usually send you an email or mail for a coupon for extra 20-30% off. Like if you shop a lot, then you probably are really save a lot of money. On the other hand, if you're not able to pay off your bill at the end of the month, then then it's better to not save the money by spending more. I hope you understand what I'm saying.
And just looking at one other question, you mentioned the interest-free grace period. Does that vary in terms of who you take your credit card out with, or is it pretty standard?
Yeah, definitely. But the regulations requires you to have a minimum 21 days. Requires all the credit cards company to have a 21 days minimum grace-free period. So, but some credit cards offer longer, or some credit cards or even offer longer period if you don't pay off your balance. I know some credit like CIBC have a standard 21 days, but if you carry a balance, they may extend it grace period, interest-free grace period next month for 24-25 days to give you more time to pay it off. So yes, it really depends on the credit card companies' terms and conditions.
Okay, great. I don't see any more questions. So thank you, Allan, for the presentation, and thank you everyone for joining us for this webinar. We will send out a very short evaluation to you. We'd really appreciate your feedback. This is a pilot that we're trying out, so any suggestions that you have in terms of topics, the approach that we're taking, or the best days and times to offer these series would be really appreciated from you. So thank you for joining us, and we hope to see you at a future webinar. Hope you have a great afternoon. Bye-bye.